Hey there, I'm Bev from bookkeepingcoach.net. With over 30 years in bookkeeping and finance, I've seen it all and fixed it all. Whether you're a new bookkeeper or a business owner handling your own books, I know how overwhelming it can get when there's no one to turn to with questions. That's exactly why I created this channel. No more messy books, no more sleepless nights. Just clear, practical advice from someone who's been in the trenches. So hit that subscribe button and let's transform those financial headaches into financial clarity, one entry at a time. Bookkeepingcoach.net. Your questions answered, your business empowered. Welcome back to our QuickBooks Online tutorial series. Today, we're mastering reconciliation, which is the foundation of financial accuracy and fraud prevention in your books. I'll show you a step-by-step process that catches 99% of bookkeeping errors. You'll learn professional techniques to solve even the most stubborn reconciliation problems. I'll also reveal hidden time savers that can cut reconciliation time from hours to minutes. Step-by-step reconciliations are important. Let's start with preparation for reconciliation. Gather all your necessary documents, including your bank or credit card statement, with clear beginning and ending dates, access to all your transaction documentation, the previous reconciliation report if it's available, and notes about known discrepancies or unusual transactions. Verify the statement data. Confirm that you're reconciling the correct account, and verify the statement beginning and ending dates. Note the beginning and ending balances, and check for any bank errors from previous statements. Review the account for obvious issues. Look for duplicated transactions, check for missing regular transactions, identify any obviously miscoded transactions, and verify large or unusual transactions are legitimate. Now let's start the reconciliation correctly. Access the reconciliation tool by going to the transaction menu, selecting Reconcile, and choose the account to reconcile from the drop-down. Enter the statement information accurately, the beginning balance, which should match the previous statement's ending balance, the ending balance from the current statement, and the statement date, the last day of the statement period. Add in any service charges or interest directly in the reconciliation window. Verify that the beginning balance matches. If the beginning balance doesn't match the previous ending balance, stop and resolve this issue first. Check for uncleared transactions from prior periods, look for changes to previously reconciled transactions, and review prior reconciliation reports to determine your discrepancies. When working through transactions systemically, use effective sorting strategies. Sort by date to follow the statement order, sort by amount to match larger items first, or sort by type to group similar transactions. When checking off transactions, mark them showing on the statement and leave unmarked those that are not on the statement. Pay attention to the transaction dates and verify the amounts match exactly. Focus on accuracy over speed. Some transaction matching best practices include matching deposits before checks or payments, grouping similar transactions together, using the running balance feature to catch errors early, handling bank group transactions carefully, like combined merchant deposits, and noting discrepancies as you go rather than waiting till the end. Before completing the reconciliation, perform these final checks. Ensure the difference is zero. Verify the number of items matches the statement. Check the total deposits and credits match the statement, and confirm total withdrawals and debits match. Proper completion steps include clicking Finish Now only when the difference is zero, saving the reconciliation report as a PDF, considering saving a detailed report showing all transactions, noting the reconciliation date for future reference, and documenting any unusual items or adjustments. Post-reconciliation tasks include filing the reconciliation report with the statement, addressing any outstanding issues that were identified, and noting any items that need research or follow-up. Make sure to communicate the completion to any relevant stakeholders. Let's discuss addressing discrepancies and troubleshooting unbalanced accounts. First, identify common reconciliation discrepancies. Transaction differences include amounts entered incorrectly, like maybe transposed numbers, transactions duplicated in QuickBooks Online, bank fees or interest not recorded, deposits recorded at incorrect amounts, and checks recorded differently than the cleared amount. Timing differences include transactions entered in the wrong month, bank processing delays affecting clear dates, deposits in transit not showing on the statement, and outstanding checks from prior periods. Structural issues include previously reconciled transactions being modified, opening balance entered incorrectly, bank errors on the statement, multiple users making conflicting entries, and transactions categorized to the wrong account. When troubleshooting, take a systemic approach. For small discrepancies under $100, look for a transaction with the exact difference amount. Check for transposed numbers, for example, $45.89 versus $48.59. Review for missing service charges or interest, and look for amounts entered as a negative instead of a positive. For larger discrepancies, sort transactions by amount to find missing items, verify deposits in transit from the previous reconciliation, check on outstanding checks from previous periods, review bank feeds for unmatched or unaccepted transactions, and compare transaction total by type, checks, deposits, etc., to the statement. For persistent problems, run a transaction detail report for the account, export it to Excel for advanced filtering and analysis, and use the bank statement as the truth source and verify line by line. Review journal entries affecting the bank account and look for transactions assigned to the wrong bank account. When handling historical discrepancies from recently reconciled periods, for example, the last 3 months, you may need to undo previous reconciliations if necessary, correct identified errors, reconcile from the earliest affected period forward, and document any changes made for the audit trail. For older discrepancies, determine the materiality of the discrepancy. Consider an adjustment entry if it's immaterial and research is exhausted. Create clear documentation of the research performed, get appropriate approval for adjustment entries, and ensure the adjustment doesn't create tax or compliance issues. Prevention strategies include implementing more frequent reconciliations, weekly or monthly, creating transaction entry controls and approvals, training all users on proper transaction entry, documenting reconciliation procedures for consistency, and considering lockout dates for reconciled periods. Reconciliation adjustments should only be used in appropriate scenarios. Immaterial differences, typically under $10, extensive research completed without resolution, historical discrepancies beyond practical research period, or when the cost of additional research exceeds the value of the accuracy. The process for creating an adjustment should be used only as a last resort through investigation. Document all research steps taken before the adjustment, use the reconciliation adjustment feature in QBO, create a detailed memo explaining the reason for this adjustment, specify the expense account for the adjustment to post to, and get appropriate approval based on the amount. Follow-up processes include monitoring the account for similar issues in the future, creating preventative controls for identified problem areas, documenting in accounting policies when adjustments are permitted, and reviewing adjustments quarterly for patterns or systemic issues. Let's talk about dealing with bank feeds, when to use them, and what their limitations are. Bank feed advantages include automation that reduces manual data entry, capturing transactions in real time, reducing the risk of missed transactions, standardizing transaction importing, and creating consistent naming and categorization. Potential problems include over-reliance on automatic categorization, duplicate transactions when manually entered, transaction date mismatches between bank processing and the actual date, merged transactions appearing differently than on the statement, split transactions appearing as single amounts, and download gaps or connectivity issues. For effective initial setup, use a secure direct connection when available. Set an appropriate date range for the initial download, and carefully review the first data import before accepting. Watch for and remove duplicate transactions, establish naming conventions for downloaded transactions, and configure default categorization for common transactions. Connection maintenance involves updating logon credentials immediately when changed, addressing security challenges promptly, reconnecting accounts after bank security updates, monitoring for connection stability, and having a backup process for manual import if the feed fails. For daily or weekly processing, review new transactions regularly, accept and categorize transactions promptly, and never accept transactions without verification. Add details to the transaction descriptions for clarity, split transactions when necessary before accepting, and use rules for consistent categorization. The reconciliation-specific approach involves processing all bank feed transactions before reconciliation, matching downloaded transactions to the statement before addressing unmatched items before formal reconciliation, using the statement as the truth source, not the bank feed, and verifying transaction dates match statement dates, and manually adding any transactions missing from the feed. Known bank feed issues include delayed transaction posting. There's usually a 1 to 2 day lag, inconsistent merchant information, missing transaction details, combined transactions like merchant deposits, and mismatched processing dates versus transaction dates. Effective workarounds include creating documentation about known feed quirks, developing consistent handling procedures for special cases, using the memo field to add missing details, creating custom rules for recurring unusual transactions, and maintaining backup documentation. Bank rules are a powerful feature for categorizing transactions automatically, applying consistent categorization rules to similar transactions, streamlining the bank feed acceptance process, and minimizing manual data entry. To create effective rules, go to the banking menu, Rules, New Rule. The rule components include a descriptive name, triggering conditions, transaction description, amount, bank text, something like that, and resulting actions categorized to a specific account, assign a class, a tag, add a payee, split by a percentage or amount. For rule organization, create a clear naming convention like vendor: category. Group similar rules together, document rule logic for team reference, review and update rules periodically, and archive obsolete rules rather than deleting them. Best practices for rule application include creating rules for high volume recurring transactions, using multiple conditions for greater accuracy, being specific enough to avoid incorrect matches, testing rules with historical transactions before full implementation, using the Show More Options feature for complex rules, regularly reviewing rule effectiveness, and adjusting as vendor descriptions or patterns change. When handling transfers between accounts, use these special considerations. Create dedicated transfer rules to automatically categorize. Always check for duplicate transfer entries. Verify both sides of the transfers during reconciliation, and create a transfer verification procedure as part of your reconciliation process. What's your biggest challenge when reconciling accounts in QuickBooks Online? Have you found any helpful techniques for solving stubborn reconciliation problems? How has using bank feeds affected your reconciliation process? Share your experiences below in the comments. I'm offering a free 30-minute consultation to review your current reconciliation process. I'll identify opportunities for streamlining and error prevention and create a custom reconciliation strategy for your business. The link to schedule your consultation is in the description below. Thanks for watching, and don't forget to subscribe for more QuickBooks Online tutorials.